Is the 17th of November 2010. As you can see the date here on this live chat during the Asia session. This video is for educational purposes only. It's neither solicitation or an offer to buy or sell any security at all. Okay, as we were showing you before in the first part of this series of a video that we title live trading with master key. Okay, so if you have not watched of the live trading with master key part 1, you may go and watch that video, live trading with master key part 1. Okay, this is the part 2, live trading with master key part 2. Okay, so we took this signal right here, okay, where I have the highlight level here, and the price was going up nicely and pull back nicely now, and a continued movement to the upside. What I'm going to do now in this part of this video is to draw a kind of a channel here. Okay, it's not a very good one, but I will try my best to draw it now. Okay, we have a channel bit like this. Okay, so this is our channel right now. This is not the best channel that I can draw, but we leave it like this for now. Okay, we can clearly redraw another one. Now what I will do also draw the median line of this channel also. Okay, so we leave it like this for now. Okay, so this is what's happening now. What is the beginning of this series of videos? Okay, we notice that on a 50-minute chart, okay, as you can see, the price, the stochastic is overbought again. And if you can see on this 50-minute chart, people were so desperate selling. You see, they wasted an hour of our time, okay, selling without any success here. Or this is 50-minute candle, 50-minute candle, 50-minute candle, 50-minute candle. These are the people who are coming to this market selling willy-nilly with the stochastic indicator. These traders, they do not understand the stochastic indicator, how they can use it. Okay, and also I don't know what they are looking at really. Okay, because they fail to know that it is time to buy, not the time to sell. Now it is time to buy. I'll go back to the 2-minute chart, okay, to show you how we have the progression. As you can see, all this red candle here, these are the people on 50-minute chart. You see this one here, this is somebody powerful that was trying to push the price back down because of the stochastic on the 50-minute chart. And these people, sometimes they make those who are completely right lose money. Okay, that's why you have to control and know exactly where to place your stop loss and when to enter the trade, because of all these people coming in very wide and sometimes they are a bit aggressive also, but they are completely wrong. That's why we know. Okay, so using the master key trading system, the master key has given us a clear cut buy signal right here. As you can see, the price was going up when some people were so desperate. And the good thing about this particular signal is that a lot of traders are completely wrong. Okay, and you receive a signal to buy. And what usually happens as the price start going up, people start pushing their some traders who always like to move their stop loss. They will start moving their stop loss, moving their stop loss, moving their stop loss, while the price putting more pressure on them. Okay, do not trade like that. Okay, know when it's time to buy and buy, know when it's time to sell and sell. Okay, so some people will be moving their stop loss, moving their stop loss, moving their stop loss. Sometimes it's justified to move your stop loss. Okay, but sometimes you just need to recognize that you are completely wrong and close your position straight away. Okay, but if you know that you have it's a high probability trade, you may move a little bit your stop loss. That's it. But sometimes it's better to let the trend go against you. You are taken out. You say ouch. That's it. End of the matter. And or sometime, okay, if you know that there is a high volatility in the market, you may move your stop loss a bit, okay, to readjust your position. Or if you notice that you didn't place your stop loss very well, you may place it in the correct place. Okay, but like I said to you, the 5% rule always applies. Okay, so right now Okay, as you can see, the price went out of this channel that I draw. You see, these are the volatility. These are extreme circumstances. This person is a powerful people. Okay, people who can move the market, but they were trying to move the market in the wrong direction. Okay, so the smart money push it back into the box. Okay, here also the bullish momentum was quite strong here. Okay, but as you can see on the 50-minute chart before, the price supposed to go from this level. You see, the momentum was increasing nicely here. Okay, the price rises up nicely, came back inside the box, went again above it, was about to go fly away. That's what I'm talking about, fly away. But all these people who were completely wrong were delaying our lovely profit. This is what I'm talking about. And this is what annoys me sometimes. I see all the time people delaying our profit. Okay, they are delaying our profit because we know that the price should go up, but they are selling. Okay, but it's their right to sell if they want. This is what I'm talking about. Day trading is a competition. When you are buying, somebody else is selling. You see, we are buying here, we bought it here. Some people were buying, you were selling. Okay, but at the end of the day, we know that we will take our profit by all means. Okay, this is about the master key a day trading system. Okay, like I showed you also before in the previous video yesterday. Okay, we know that if the channel is rising, okay, the bullish momentum is good. Okay, and if the price is riding the upper part of the rising channel, then the momentum is very strong. If the price break that upper part of the channel and went outside the channel and was riding above it, that's strongly bullish. Okay, and you may consider to control your risk carefully so that you can box in your profit. And if the price pop out on the other side, on the lower part of the channel of a rising channel, that's a weakness of the of the bullish momentum. But sometimes, as you can see, the price may come out sometimes very well, okay, and then go back into the channel. Okay, that's why we designed the TSTW24 to quantify clearly when the trend is very strong and when the trend is weak. So with that information, you know that the trend is strong. If the price is popping out and going back into the box, you will re-enter again or multiply your position in order to maximize your profit. This is about how you are managing your trade. Okay, so this is it. We are in this trade since this level of 13484. This was our entry point where we draw our green horizontal line. The price now at 13514. Okay, that's very good. So since we enter here, as you can see, the price went up fast. You want to enter exactly. You see right there, it was time to buy. This is it. It was time to buy, and right there you see the price just going up quickly. Okay, and then these people try to delay us. Okay, but the bullish momentum is intact. As you can see, the channel is rising. The price is right now on the upper part of the rising channel. It's bullish. Okay, this is about how you can use also the channel as a momentum indicator instead of using the normal momentum indicator, because in the past, okay, before the computerized trading, okay, the momentum indicator was measured carefully with the channels. Now, since we have the computer age, we come up with a momentum indicator, but the channel is more accurate, okay? Because you have different levels: the lower part, the upper part, and outside the channel, okay? On the upper side of the channel, okay? Outside on this side, okay? Outside on the lower part also. So there's nothing that you cannot figure out with the channel alone, okay? But if you are using just a momentum indicator now, it's just going to be going up and down, up and down, and okay, above zero, below zero. But with this channel like this, you know exactly what's going on. You can see it clearly. You can see it clearly, okay? And you take advantage of that, okay? This is how you can use a channel, a simple channel, to measure the momentum of the price. Okay, so this is a live chart, okay, on this Euro USD. Why we use all the time Euro USD? Because Euro USD is a leading currency pair, and also it represents the stock market in general. It moves in the same direction like the S&P 500. okay, in moving the same direction like gold, okay, and also crude oil and all the rest of it. And so it's a very excellent tool. We watch it all the time carefully to know exactly what the market, which direction the market is likely to go. Okay, so I trade most of the time the Euro USD because all the time there is a liquidity in the Euro USD. Sometimes people go and trade some stock and there is no volume at all, and the stock will move the whole day maybe 10 pips or 15 pips, while the euro is moving every day like 100 pips, almost every day 100 pips, and you move it non-stop. So you can focus on the euro, trade the euro, and like myself, I know very well the personality of this currency pair very well, and I know what sort of traders are in this market, the type of traders that trade the Euro USD. A lot of scalping going on in this Euro USD. I know the time frame that are very crowded on this Euro USD, and I know also what to look for if I'm trading the Euro USD. For those who are trading forex, if you want to enter any trade in forex, you need to pay attention to the euro USD first, okay? Especially for those currencies that are moving the same direction like the euro USD. We know also that the USD Swiss franc, the USD Swiss franc currency pair is moving in the opposite direction to the euro USD, and the USD yen sometime will move in the same direction like the euro USD. Sometime it will diverge completely from the euro USD and move completely in the opposite direction to the euro USD. It happened, okay? So nothing is exactly the same all the time because we are dealing with human being behavior. This is how you need to approach trading all the time, being flexible, and also very important because there are a few videos out there that are telling traders to pay attention to other traders. This is so important. Pay attention to other traders, other participants in the market. Know exactly what they are trying to do, what kind of tool people are using. We know that the majority of traders are busy using the stochastic indicator. And the second thing that we know also that they are using it wrongly. So when we know that they are likely to make a stupid mistake, okay, it happened. Like now, they shouldn't be selling, they are selling, okay. So we will take advantage of that, okay. And that's the reality of the market, okay. And it's happening all the time because these people should learn to understand the tool. If you want to use any tool in the market, you must understand it. Whether you are using MACD, moving averages. A lot of people use moving averages, they talk about whipsaw all the time because they don't understand how the moving average function. So they are whipsaw in, whipsaw here, they buy here, they buy here, they buy here, they sell there, and they get whipsaw and they say the moving averages are useless. But if you know exactly how you can use moving averages, you can use moving averages to cream this market consistently, okay. This is it. And also people use RSI indicator and they use it wrongly. The same thing for the rest of the indicator that people are using in this market. So if you see people trying to if you know that the people are completely wrong, you take advantage of that, okay. That's what we are doing here. I hope you enjoyed this video also, that you will put into practice in order to cream the market consistently. I invite you to watch the third part of this series that we call live trading with the master key day trading system. Until the next time, enjoy yourself and be very happy. Thank you.